Hello, my name is Paris Clough and this is Financial Self-Reliance. In this video, I'm going to share with you the fastest and most effective way to build an emergency fund. In almost 20 years as a financial services professional, I've helped a lot of people build emergency funds. And in this video, I'm going to share with you some tips and tricks and give you some clarity on how to really build an emergency fund the most effective way. First, I'm going to talk about why you need to have an emergency fund. Then I'm going to share with you the exact recipe to build an emergency fund the most effective way for your particular situation. And then at the end of the video, I'm going to share with you something that I've personally never heard another financial services professional share about building an emergency fund. This tip or trick is something you've probably never heard before. Your mindset changes everything. If you'd like to learn how to manage, protect, and grow your money, then subscribe to this channel where we're going to share with you the mindsets and the skill sets necessary to build and grow your assets. In the last video, I shared the 3 reasons to save: short-term, mid-term, and long-term. In that video, I went into detail on the short-term reasons to save and ways that you can save in short-term savings accounts. This video is designed around the mid-term account or the emergency fund. Sometimes I call it an opportunity fund. Emergency funds should be far enough away that you're not tempted to get that money and spend it, but close enough that you can get access to it in case of an emergency. It should also be in an account that will give you better growth and tax treatment, like a money market account or a low volatility bond fund. All right, first let's jump into why you should have an emergency fund. The first and most obvious reason is, what if you lose your job? You're gonna need to have some money set aside to continue to pay the bills. That's the first reason why most people want to have an emergency fund. Another reason to have an emergency fund is, what if you have a hardship, or you have a downturn in the economy? Or what if there's a recession? A lot of people will have an emergency fund if they get furloughed. So there's a lot of great reasons to have an emergency fund. The important thing to remember is that I'd rather have an emergency fund and not need it than need an emergency fund and not have it. And last but not least, having an emergency fund gives you peace of mind. In the last video, I shared with you some of the most powerful reasons to have savings. One of those being the peace of mind that it brings and the confidence that it brings to help you to obtain your goals. So it's important to make sure that you have an emergency fund and make it a priority to get one and to get your emergency fund built up as soon as possible. All right, so let's talk about how to build an emergency fund. The first thing you want to figure out is the job that you have or the industry that you're in. If you were to lose your job today, how long would it take you to find another one? Is your job in high demand? Could you probably find another job quickly? People who have a higher salary are usually going to take longer to find a similar paying job than those with a lower salary or a lower hourly wage. So it's important for you to realize that a lot of people, when they say build an emergency fund, they say 3 to 6 months worth of money, because the average person takes 3 to 6 months to find another job so that they can continue to have that income, and so the emergency fund will tide them over. Well, if you're in an industry that you may not find a job for 6 or 7 or 8 or even more months, you're going to need to have a larger emergency fund to be able to tide you over for a longer period of time. I also tell people that are in a sales or commission only job, they should probably have 12 months worth of savings, because they never know if they're going to have a month where they're not going to make any money, and they're going to need to pull from savings to be able to survive that month until they can have those sales close. So the first thing to do is to determine how long it will take you to find another job in case you lost your job. That will let you know whether you should have 3 months, 6 months, 9 months, or 12 months in your emergency fund. Now they say that you should have 3 to 6 months or 9 months or 12 months of your expenses. So the first expenses that you want to make sure that you calculate are your fixed expenses. These are the expenses that you can't live without. These are things like your mortgage payment or your rent payment. They're things like your cell phone. Honestly, you'll need your cell phone to make calls to find a new job, so that's a critical expense. You're going to also need to have expenses for food. You're going to need to have expenses for your car payment, for insurance, for some of those critical things. Those are the first things you want to calculate. Start with your fixed expenses and build the 3 to 6 months worth of savings and emergency fund first with those fixed costs. So you're going to want to make sure that you have your mortgage times 3, your car payment times 3, your car insurance times 3. If you got into an emergency, what are the things that you could cut out of your life right away? Those are the things that would be considered your variable or discretionary expenses, and those you can build later, but start with the fixed costs first. and then add those discretionary and variable costs later so that you have the full 3 to 6 months of all of your expenses at some point in the future. But the most critical things to have are those fixed costs, those ones that you can't do without or you'll get in serious trouble. Let's say that you have total costs of $4,000, $2,000 is fixed costs, and so you want to have 2,000 times 3, which would be $6,000 as your minimum. That's your minimum goal. That's the goal that you want to have, that you're going to make sure as you do your budgeting, you're going to set aside money to get your $6,000 emergency fund as soon as possible. Although your total costs are $4,000, 4,000 times 3 is $12,000, and $12,000 can seem like it's too much. It seems too big. And so I want to give you something that you can start with, a first step, something that you can believe that you can actually accomplish. And that's what's important about creating an emergency fund. A lot of times people think, if my expenses are $4,000 and I need to have 3 to 6 months of that, that's $12,000 to $24,000. There's no way I can get that anytime soon. I'll have an emergency way before I get to that point. So I want to share with you that you should start with your fixed expenses, because that's a more reasonable thing for you to get to, and those are the most important things anyways. Because if you lost your job, you're not going to go out to eat every week. You're not going to need to have all the cable channels. Those are some things that you can cut out while you're looking for a job that you can add back later once you get your job. So based on our example, you would start with $6,000 as your goal, because those are the fixed costs that you would have. And then over time, once you hit that $6,000 goal, over time you're going to want to then grow to $12,000 so that you have 3 months of your total expenses. Once you have 3 months, then you can think about whether you need to have 6 months or 9 months or 12 months, and I would always start with those fixed costs first. So another thing I share with people about building an emergency fund is that if you're going to have 3 months of money set aside, 1 month should be very easily accessible. Like for example, you can put it in your savings account in the bank. I would pick a savings account that pays a little bit more than the average savings account, maybe have a high yield savings account. The reason why is that you can get access to that money really quickly, and you can have it available to you immediately. The other 2 months, and as you're building more, the other 2 months you can put out into a money market account or into a low volatility bond fund that's going to give you a little bit better growth and better tax treatment. And that way you're actually having the growth of those bond funds working in your favor to help build your emergency fund for you even faster. So not only are you going to be adding to the fund, but your bonds are going to be growing, and the mutual funds that you're going to have are going to grow with you, and as you put more money in, as they grow, you're going to have more money in your emergency fund just from the growth of your fund. So it's important to have at least 1 month readily available, quick, easy access, and then 2 to 3 months, and then beyond that, have that in those very easily accessible but far enough away that you're not tempted to grab that money and get after it and get access to it. So go ahead and click like if you're getting value out of this video so far. Now the last thing I wanted to share with you is something that you've probably never heard another financial professional talk about. This is something that I've never heard anybody talk about, and it's something that I've done in my own personal life and I've shared with my clients, and I've found that many of them are grateful that I share this with them, and they were surprised that this was an option. One of the biggest expenses that we have in our life right after housing is food. And so I share with people, what if you had an emergency food supply? For example, canned foods or dried foods, bags of beans and rice, maybe canned foods of chili, canned foods of beans that you want. I even have in my own food storage, I have a lot of spaghetti noodles and other noodles, and I have a lot of spaghetti sauce. So you can actually build a 1 month supply of food. What I would suggest is taking what you're currently eating and buying a little bit extra each week until you have a week supply, and then build a little bit more till you have a month supply, and then build that to the point where you have a 90-day supply of food. Also, it's important to have a 90-day supply of water. So instead of having money set aside for buying food, you can actually pull from your food storage and use the food storage and keep your money for those bills and those things that you can't pay for any other way. So one of the things that I've shared with my clients over the years is having this food storage as part of their emergency fund. Many of them have been grateful. In fact, I've personally done this with my own emergency fund, and I currently have a substantial food storage that I can pull from and use in case of an emergency, and I can use my cash for other things. I hope I've given you some clarity and some tips and tricks that you can use to build your emergency fund as quickly as possible. Most people think about 3 to 6 months of their expenses as a daunting task, but if you start with your fixed expenses, build 1 month first, then build 2, then build 3. Then after you have your fixed expenses, add in your variable expenses and your discretionary expenses and build that over time. I'd rather have an emergency fund and not need it than need it and not have it. And having an emergency fund with cash is important. Having an emergency fund with food storage is also important, and water storage is also critical. I hope that you got a lot out of this video, and I look forward to seeing you on the next one. And you're not going to go have a 100-channel cable satellite TV